What's up everyone, I'm your host Edward, and on this channel I talk about stocks and crypto news, so if that's something you're interested in, feel free to subscribe and hit that notification bell so you can see my videos every single week. But yeah, there's a couple news that I really want to get in today, and crypto seems to be pumping up to the moon today. So let's not waste any more time and let's just dive right in. So as usual, I'm just going to go through the markets, and today we have a green day, and finally I haven't seen one in a while because the Nasdaq is up about 1%, the S&P and the Dow Jones are up about half a percentage. If we look at our heat map here, majority of the market is green today. There are just a couple stocks that are down, but yeah, unfortunately there's no sales, but your portfolio should be looking pretty good today. Now going into the crypto space, the whole entire market is up about 6.82%. And if we look at Bitcoin today, it is hovering at about $48,000 right now. And Ethereum is almost up about 8% in the last 24 hours. And right now my Bitcoin cost basis is around $48,000, so I'm pretty happy. But quickly going through the technicals, I did draw the fib retracement from the highest point to the lowest point. These lines right here indicate the support levels. And if we look here, we've been trading around these two levels, which is at about $42,000 to $46,000. But today we did break above this level, which is why Bitcoin is right now pumping to the moon. So if we zoom out a little bit, our next target is at about $51,000. Unless Bitcoin does roll over back down to these levels here. So that's something I'm going to be watching. But the first news that I want to talk about is Wish stock, because it has plunged about 27% in the last 2 days and almost 80% since January as users flee. So recently Wish stock did come out with their earnings, and to be honest, it wasn't a good one, because if we look here, right, the CEO did say that they had a really strong start during the second quarter of 2021, but the demand slowed down due to a number of headwinds. And over here, right, in the macro perspective, the vaccine rates are increased and stay-at-home orders began to ease, and pretty much the economy started to open up, which is one reason why Wish stock didn't do well during this quarter. And not only that, daily active users and active buyers on the platform declined more than they expected. And over here, it is what shocked a lot of investors. App installs dropped about 13% from the prior quarter, and the average time spent on the app plummeted 15%, which is why revenues did drop heavily. And not only that, ad costs increased at a faster pace than expected, cutting into Wish's marketing efficiency. Now the thing is, if you own the stock, I highly suggest you to download the app because it does help their numbers, and try your best to shop on Wish because they are not doing really well at the moment. And right now the stock is up about 10%. And they're trading at a $4.28 billion market cap. And currently, looking forward to the rest of the year, I think Wish can make a comeback. Quarter 3 and quarter 4 is when e-commerce does the best because of the holidays and the gifts that people have to buy. So looking into the near future, I don't think Wish is worth this much. And if we look here, I think this is super important. They currently have a total cash position of $1.5 billion. There is no way that this company is going to be worth less than that. And the market cap right now is $4.3 billion. Because there's no company out there right now has a market cap less than their total cash position, because cash itself should be part of the market cap. And looking into their liabilities, it doesn't seem like they have any long-term debt. And for a company to go bankrupt without any debt, it's very difficult. And when a company keeps dropping down in value, eventually a company will buy them out. Usually the company being acquired, the stock price will jump to the moon. And in the past, Amazon did try to buy Wish, but the deal didn't go through. But overall, I still like the stock because remember, this is a software business that owns no inventory, and it's pretty much a dropshipping business that's implemented into this app. So all in all, in my opinion, I think this is undervalued. But remember to do your own research and due diligence before doing anything, because this is not financial advice. Next up, it seems like OnlyFans bans adult material after pressure from payment processors. Now this was pretty much the biggest news yesterday because everyone knows OnlyFans as adult content, and obviously, right, in terms of a business strategy standpoint, I think this company is done, to be completely honest. And I understand that they did make about $2 billion of revenue last year, and I'm not gonna lie, that kind of blew my mind on how many guys out there and girls pay to watch adult content on OnlyFans. And it gave me a more broader perspective of just how big the TAM is for this market, and TAM means total available market. But the key point is that they're only banning adult content, but any nudity is still available. Now here's the key point. It seems like this is the main problem and why they're banning adult content, because Visa and MasterCard don't like adult content and they don't want to be associated associated with it. But greedy companies like this, right, ruins everything, which is why I always think crypto is the solution to this, because crypto doesn't care, right? But corporations do. And I think that's the solution to this. Not sure why OnlyFans isn't taking the crypto route. Maybe because it's still very speculative, but crypto in general solves these type of issues because crypto doesn't care. But I think a lot of people are right now transitioning to Patreon. I feel really bad for the venture capitalists out there that invested into this company because they are currently very worried. And I think a lot of people are flocking to Patreon now. So that's that. Next up, Coinbase is going to add over $500 million worth of crypto into their current holdings. And the CEO, Brian Armstrong, tweeted that they're going to invest 10% of their profits into crypto. Now, the reason why I think this is important and why I really want to talk about this, because I think Brian Armstrong is realizing the supply shock is coming soon, and they're trying to grab as much crypto as they can that they can supply to their customers. I don't have the charts, but I did see on Twitter that their Bitcoin supply has been dropping substantially because of this bull run, and a lot of investors, right, are going on to Coinbase and then transferring it over to a cold storage or cold wallet. So the thing is, if Coinbase doesn't have any crypto for their customers, then that's going to be a problem for the company. And you know, as a CEO, you got to make very great decisions, and this is one of them, and this is a really great example. And if I were to be an investor into Coinbase, I would be super glad that they're going to be doing this. But yeah, in the end, just wanted to touch base on my supply shock theory, and if it does play out, right, you heard it here first. So yesterday, Elon Musk and Tesla had AI Day, and they revealed a robo prototype by next year. And remember, that's the key point, right? Prototype. So it's not going to be available to the market anytime soon. And yesterday, right, he did say that this probably won't work, but it's a really cool concept. And the purpose of this robot is to help the world and eliminate dangerous, repetitive, and boring tasks, like lifting very heavy goods. And this robot is a solution to it. And the code name for this robot is Optimus. But this is Elon's vision of this robot, right? It should be able to help you go to the grocery store without you having to be there. It's going to be able to carry about 45 pounds and lift up to 150 and can run 5 miles per hour. This is my opinion, but every year Elon Musk and Tesla has a huge event that tries to wow the world so that they stay relevant in the news. I'm not gonna lie, right? This is a very smart marketing move because essentially this is free marketing, and anything controversial or has a wow factor usually becomes a headline. But we have to remember this, and this is a key point. In 2019, they did do something called Autonomy Day, and Elon said that they'll have 1 million autonomous vehicles on the road by 2020. We're already in 2021 and no robo taxis are yet to be seen. And also in October 2016, Elon Musk did show off their solar roof, but it turned out they were only conceptuals and it took them a couple years for it to be available to the masses. So this robot right here, I feel like it's not going to come until 5 to 7 years down the road. And remember, this might not work, but overall I like the idea. I just don't like over promises because it does upset investors. So that's my quick take on this. Next up, education department will cancel student debt for more than 320,000 borrowers. And here's a key point. They announced that they're going to cancel $5.8 billion worth of student debt. Now the thing is, if we look into the debt clock, US national debt is at about $28 trillion. And if we go down here, student loan debt is at $1.7 trillion. So this $5.8 billion cancellation won't even make a dent to that. And looking into this chart, right, is very alarming because student loan debt has just been going up in a linear graph. I think it's growing even faster than the S&P 500, but this chart ended at 2018 at 1.5 trillion, and right now we're hovering at about 1.7 trillion. And the thing is, interest, right, compounds annually, and it's just so unfortunate that these, colleges and universities charge like a premium for a piece of paper where all these students will have to go into a job and pay that off. And half of Americans, right, aren't financially literate, so they're going to keep kicking the can down the road, right? So very unfortunate. Not gonna dive too deep into it. But lastly, Warren Buffett says that these businesses will do the best during periods of high inflation. And I pretty much skimmed this article and it's very vague, but it seems like the key point is to just own the S&P 500 index fund. You own big name companies like Apple, Coca-Cola, and Google. And I think this is default advice because if we look at the S&P 500 from year to date, it's currently up about 20%. So if your current portfolio isn't up about 20% right now, you're pretty much losing against the market because every stock picker out there wants to beat the S&P 500. Even money managers and hedge funds can't beat it, which is why Warren Buffett advises you to, try to find a low cost S&P 500 ETF and just dollar cost average into it, because compound interest is very powerful. That wraps up for this video. If you're interested in buying crypto, please head into my referral links in the description box down below, so we can both get a small cash bonus once you sign up and make some trades. If you enjoyed this video, please smash that like button down below for the YouTube algorithm, and if you haven't already, feel free to subscribe and hit that notification bell so you can see my videos every single week. That's pretty much it, and I'll see you on the next video. Peace.